Good morning, traders. Paul Duncan here with Gamma Edge. It is Monday, the 11th of July. Let's get started. Please pause your reader. Read this. It's important to you. It's important to us. When you get done, hit the play button. Let's start with the cumulative tick model on the U.S. composite. Across the top, we have the 52-week new high, new low. We use this as a breadth indicator. It's a lagging indicator. It's still showing day over day extremely poor breadth, although obviously we are improving here. But overall, we have not yet flipped. We're not getting broad participation from the markets. The second trace here is called the filtered cumulative tick. The filtered cumulative tick shows us institutional or the big boy and girl buying when they present their orders to multiple exchanges in the form of sweeps. That persists across that 1 minute bar that we have set here. And what happens then, if we're buying, we get these upward trends only when we exceed 1,000 ticks per minute. This can be very useful. It shows us buying pressure or selling pressure, and you can see on Thursday we had some broad participation, not so much on Friday. If we take the filtered part of it away and we just have the day over day, it resets at the beginning of every morning. This is the cumulative tick, and you can see that we ended positive, 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 and positive here. So when we see something like that, and when we see this nice straight line, we call this linear up. This is a strong buying formation, and it's an indication that we should all be paying attention. Down here is the ribbon. These are cumulative tick moving averages. We don't necessarily use moving averages. We use it as an indicator of history. What you can see here, though, is that we have the instantaneous cumulative tick crossing the fastest moving average. That changes the slope. That is a very important signal for us. We are in the middle of the ribbon, so we are prone to failure. Be aware of that, but for now, just play this to the upside. You can see that if you would have gotten in as he started to transition, that you actually could have rode the SPX up quite a good distance. And we have been doing this consistently all last week in the Gamma Edge Discord. I would urge everyone to come and learn how to do this. I'm going to switch over to what's called the ARCX. That's Tick RC in TradeStation land. Also exists within TOS. We use this as a kind of a better indicator. I don't want to say that the USC that you say here is a bad indicator. It's not. It's a composite of everything, whereas the ARCX is the NYSE, the NAS 100, and the Amex, which is all the options and the ETFs. It's a very clean signal, and you can see we entered back on Tuesday. On Thursday, we cleared that upper moving average, and visually you can see how now all of the slopes of the ribbon are pointed up. These are necessary conditions for moving into a longer-term bull. What we're seeing right now is a confirmation here at Circle 2 with these all moving upwards, and we are definitely long based on this signal. So closing those short positions or looking at putting on some pretty inexpensive downside hedges, but certainly playing the upside. This signal that I was just talking about, we've extensively back tested. We are sitting right here at the red arrow at day 3, which is where we are right now. Think of this as a profit factor, and as the trend materializes and continues, this has a very good instance of being able to capture that. And after 20 days, approximately a month of trading, the profit targets on taking signals are very, very good. So just be aware of this. This is our second strongest long signal that we have, and as a result, we take these things. No substitute for risk management, but we do take these things, and you can see we're right above parity now. So we've got a good risk reward that's developing beyond this point, and so those early trades that we got into are if the trend continues, are in good shape. Down here, we've got basically the what we call the average gain or the final gain, FE50, and maximum drawdown. And you can see the drawdown starts to stabilize. And this happens in a positive gamma environment where we start dampening volatility, and that volatility is measured or is reflected over in the maximum drawdown of the portfolio. You can see that it stabilizes out very, very nicely as gains continue to go. So the signal is very good at capturing trends if they materialize. So we are doing so, and I would urge everyone here to come join us in the Discord and learn more about this. Switching gears now over to the index conditions, net negative gamma condition across the board. You'll see that here in the SPX, the SPY, the Qs, and the IWM. Also seeing short-term puts being added, short-term calls coming out across the board here on the SPX, the SPY, as well as the Qs. Not so much here. Still no demand for upside in IWM, and this continues to be kind of the theme of the day. Index volatility, when we take a look here at the VIX, you can see that we're adding calls out on the monthly boundaries here. Fairly substantial level. Want to pay attention to that. We do think perhaps we're starting to see selling of short-term premia to fund the upper levels here on the call side. We think that's important. So just pay attention that we're continuing to see very strong magnitudes of calls go in. This was a theme last week. It's a theme this week, and so just be aware. Index OI changes. Again, note we're seeing puts going back in. You can see I've highlighted here on the put side relative to the magnitude on the call side. And it's the same across the board. The magnitudes are really starting to dominate again. Downside protection, we're seeing it, and generally a well-hedged or well-protected market doesn't collapse, but it certainly can fall, so be aware of that. We could see a push downward, but we don't think that's going to be a very severe move downward, at least not a collapse, multi-percentage collapse in a given day. Taking a look at the SPX structure into today, we're seeing all the zeros move up. That is positive. We're seeing a coincidence up here in the short term SPX with 4,000 being POI, COI, and I'm showing plus GEX here. You're actually going to see it for the entire complex up at 4,100. The only reason I call these levels out is we're now starting to get above the zeros. When we're above the zeros, they become supportive, and we actually enter into a environment that if we can hit this 3980, we'll be in a total positive gamma environment. So we're in fairly good position to start running up. There's not a lot of overhead here, so it's not inconceivable that we could push upward. And note that pushing downward, we do have different levels in play here, and we'll want to pay attention to that. Here are the levels for today. The SPX PM settled is here on the left. We've got the combo here on the right, and you can read on down where the key levels are and what the adjustments are as we move through those. The 0 DTE, we're in this transitional area by the blue box. The range for today is shown here by the arrows. 3980 is probably the upper level of where we can get to. 4,000, you'll see here in a minute, is very difficult to push into. Below 3850, you can see that we could actually push down into this 3820, 3825 area. I don't think we're going below 3800, but if we do, due to the 0 DTE, you can see there's nothing down there. So if we do collapse, I don't think we're going to get much lower than 3800, at least due to 0 DTE action today. The combo, which is the AM settled plus the PM settled, still very negative. I want to note here that we're seeing approximately 23-24% of the SPX vaporizing this week. Note this key level at 4,000, 4,005. This is the JPM hedge at 4,005. We got COI, POI sitting here. Huge delta notional here. It's just going to be very difficult to plow above this until we get more calls here or these puts being closed. Not very surprising that we landed here on Friday. This is a transitional area. You can see we've got the sign change. We've got a fairly dominant level here, and this could form the base for moving up, but it also certainly can form the base for dropping down. You can see 3,800 here, 3,850, and then you can see we still have a lot of transitional structures that are down in this area. So fairly messy. The nice thing about this is that deltas are starting to turn more green. When we see that, that does show overall support for the bulls. The fact that we're still got a very negative overhead and we've got all these transitional deltas in here means we still have a very ugly structure. You can kind of see that here. We're sitting right here. We're at the bottom end of this positive gamma structure. The JPM is sitting here at 4,005. Here's 4,000. We did transition. Last week, if you remember, we had a double spike downwards here with negative gamma. So we are definitely adding to 4,000 on the positive side. And we're seeing that 4,100 as plus GEX grow. And it is the dominant expiry. So you can see 4,000, 4050. 4,100 here. We're going to have to plow through these two areas here. These are going to be sticky. I'd like to see us move up into this area and start toying with this and seeing some calls get added to start negating these. We're not seeing that right now. It's going to be hard to push above these just from a structural point of view. To the downside, we are still, even though we're showing puts being added, relative to where we were, they're fairly weak. We're not seeing a huge amount of addition here relative to what we're seeing out here on the call side. So we need to see this beefing up. If we do fall down, these potentially could become monetized, pushing us north. But nevertheless, we are seeing short term with Friday's action, Thursday, Friday action, showing that some puts are being added. Calls were not necessarily being added in mass, but it was enough to keep us right on the bottom side of this transition. So what to do about this? Watch for a push upwards into the 3950 zone. We'd like to see us move up into this positive gamma zone. We'll just have to wait and see what happens. So what's that leave for today? The market model starts day 3 on the long side. This is that double upward slope of the ribbons. Again, significant testing has gone into that. We are net long on our portfolios, looking at downside hedges, addition of downside hedges in the form of put collars, but nevertheless are looking to the upside right now. Progressive long exposure is the primary play, so keep adding those long positions as they present themselves. The wing charts are weak and deteriorating, which kind of negates part of this signal. But zeros are moving up on consecutive days. That's a positive thing. Because of that, we think the bulls are getting more emboldened as we go forward. So the market model, longer term, it's inverted. It's improving on the long signal side. We're looking for that ribbon inversion, which is still many days away. On the shorter term, day 3 of the slope model, as I set up here, index wing charts are not supportive right now, so we don't have everybody firing on all cylinders. The zeros are up, which is good, and the overhead structure at 4,000 is still going to be an overhead wall to get into. So with that, I'll bid you farewell. If you like today's comments, please join us at gammaedge.us to talk about the timing models, talk about how to apply gamma to your overall strategies. Follow us on Twitter here, gammaedges with an S, and then here on YouTube, of course, smash that like button if you like today's content, and follow us so that you can get notified next time we post something. With that, have a great day, have a great week, and we'll see you in the Discord.